The Atomic Real Estate Show, bringing you the real estate of real estate. Brought to you by Danny Bennett Productions in partnership with Direct Subs.
This episode is brought to you by the Adams Group. The Adams Group is a longtime Philadelphia real estate team that helps buyers find the right home, investors find hidden opportunities, and the sellers maximize their price with their years of insight in Philadelphia and the surrounding suburbs. They've built their reputation on honest and client-forward work. You can connect with Keith Adams via phone at 215-605-1027. He's on Instagram at the Adams Group Market, and his website is adamsgroupcompass.com. Hey everyone, Ryan Dolan here with another episode of the Atomic Real Estate Show. We have Nick Cesna here. We have two great guests and learning about an awesome new company. We have Anish, the founder and CEO of a company called Plotify, and we have his CRO in the building, Gavin, who is a mutual friend through one of our clients. But guys, thank you for coming on. I know these guys came from Pittsburgh, Manhattan, so they really wanted to kind of jump on the show, discuss the company and how you got here, because I think it feels like it's cool that we just met like a month ago via Zoom and now we're on the podcast. So I'm very excited to hear about it. I know quite a bit about the company, but the guests will love to hear about it. So thanks again for coming down and jumping on and tell us a bit about the company, how you got it started.
So actually the genesis of Plotify started way back, almost maybe even a little bit more than 25 years ago.
Oh, wow.
And that's when my journey with real estate started. So just a little bit by way of background, I studied economics and then I went to law school. The first job I got out of law school was not as a lawyer. I joined Mike Bloomberg's company, which is one of the greatest fintech companies in the world. And what I learned there was the value of data and analytics. And so armed with background in data analytics, financial markets, macroeconomics, I then started my own personal journey with real estate. And that personal journey was, in those days, I was living and working in London, England, which is where I grew up. And I remember I couldn't afford to buy my own home, and that was one of my goals in London, expensive city. When I got my first bonus check, I bought a cheap rental property in a secondary city, financed it. It grew in value, rinsed and repeated, done it again and again and again. And I think within 4 or 5 years, I'd built enough of a corpus to be able to purchase my own first apartment to live in London.
A flat, right?
A flat, as they're called, yeah. I'm converting to my American. I've been in the US for 20 years now in New York, in Manhattan. But that's where, I kind of, my love affair with real estate started then. And then I went on to personally invest in lots of different markets around the world, including India, where I'm from originally, the UAE, and also the US. And in the US, did a lot of investing, personally and professionally, actually, in single-family rentals. Not exclusively, but that was one asset class that really got to know very well. And what I'd learned, and then by the way, I also did a ton of professional investing in real estate. So I did a ton of real estate investment trust financing and investing, lending and equity financing on large development projects. What I learned through my journey was a couple of different things, right? The first is that residential real estate, and there's lots of different ways to invest in and make money out of real estate. I think we all know that. But specifically, my experience has been that investing in cash flowing residential real estate, if you look at the long curve, I'm talking about 50-year data, that is probably one of the best performing asset classes in the world. And it's resilient through economic cycles. We are fundamentally undersupplied around the world, and specifically in the US. And then if you get into more local markets, you see that in different forms. So it's the asset class that I've never lost money and always made money in. But as you guys probably know really well, it's really difficult to execute all the different points in the chain, right? So if you think about the journey of an individual investing in real estate, start to finish, right? Trying to understand the macro dynamics, right? Are prices going to go up or down, or rent's going to go up or down? Trying to figure out which cities or locations within the US are the best locations to invest in. Then how do you find properties in those cities and do your due diligence, and then make sure that you're buying the right asset at the right price. And that actually, if you get to that point, that's great. Now you got to transact and you got to finance it, which is a parallel process. And that's when the pain really starts, because now you got to manage it, right? You got to hire a property manager. You got to think about taxes. You got to think about insurances. You got to think about making sure your tenant's right. You got to think about downside scenarios. So that journey, start to finish, is probably somewhere in the region of 150 process and decision points. And so what I had never seen done before is a company that helps an individual who could be a busy professional, right? So think about anyone who might be like a young software engineer who's just starting their journey, that has maybe ambition to buy their own place, like I did, 25 years ago, but doesn't have the corpus, but they want to start getting exposure to real estate assets, all the way through to a high performance individual who could be, a professional athlete or a surgeon. They're busy. They don't have time to go through those 150 process and decision points. And I'd never seen a company that does that for an individual investor, start to finish. And that was really the genesis of Plotify and why I started it. It was almost a challenge.
Yeah.
Why had nobody done it before? Is it possible? Almost wanted to prove it to
These
myself.
150 precision points. Tell me a little more about that and what kind of that is, actually.
So it sort of follows the experience that not just me, but other team members within Plotify. We're a team of about 25 people now. We're made up of team members that have experience in data science, they have experience in technology, they have experience in real estate, they have experience in investment management. So we brought all that together. And we mapped out very specifically, right, just blank sheet of paper, right? How does somebody start to think about investing in residential real estate, right? And there's lots of different options, right? And again, some of them work for some people. But the starting point for us was, what are those options, right? And those options are, you can invest in an investment fund, right? And you've got really smart people that are going to try and find the right properties to invest in. There are real estate investment trusts. There's all sorts of tech platforms out there today that can, help you get access to the asset class. Or you can do it yourself, right? All of those options, ultimately will help people to preserve and grow wealth, but all of them have issues, right? For example, if you're investing in a fund, you're kind of locked up. You're not in control, right?
Yeah, you might put your money in. You may have 7 years tied up.
Yeah,
and you
exactly.
don't really have the ability or freedom to pull in, out. You don't have much say of anything what happens to your money. Yep.
Exactly.
Real estate. It's not really. It's not sexy at all. Like
Yeah.
a REIT, like investing in a REIT is
Yeah,
very.
it's
just,
exactly.
It's kind
exactly
of
right.
boring.
Yeah, and again, they serve a purpose. There are some benefits, right?
Sure.
REITs, for example, public REITs in particular, right? They do offer liquidity, right? So you can buy and sell like a on the stock market. So that's a huge benefit. But if you look at the erosion of returns in REITs, right? There's when you get to what your operating income is, and then you adjust that for all the overhead that they have, it really erodes your returns in most cases, not all cases, right? There's ways there. And also with REITs, right? One of the things that we love about real estate, me personally, and I think a lot of our team members and a lot of our clients, or members as we call them, is the diversification away from the stock market or other forms of investment. And REITs are correlated to equities, the public REITs at least. So each of these options has got problems. And meanwhile, doing it yourself has got all these layers of friction that you need to, if you're not doing it full time, right, and you're busy,
You'll quickly
developing
learn,
software
or
playing sport or in surgery 6 days a week, you're really not going to be able to optimize and make good decisions. So when we had a blank sheet of paper, we started to think about, all right, what are people's options? How do they start that journey, right? And one of the things that I've known and I've seen, my parents did this, for example, which is they were both professionals, engineer, accountant. They worked hard, they saved money, they bought their own house, and when they had some excess savings, they bought a rental property, but it was in their backyard, right? It was down the street from where they lived, and if they got really adventurous, they might go to the next town, right? But that doesn't really optimize your diversification, right? So that was one of the things that was a starting point. It's like most people just are constrained by geography. Right, they want which, by the way, there's nothing wrong with. There's plenty of people that have built nice portfolios worth a lot of money, which are local to them. But one of the things that we really were excited about is that if you talk about U.S. Housing and the U.S. rental market in general, the U.S. is a huge country, right? Geographically, economically, in all sorts of ways, right? If I live and work in New York, right, why should I be constrained to just investing in my local area? Whereas I might be wanting to invest in secondary and tertiary cities that are thousands or hundreds of miles away from me. But there's no real efficient way to do that on a scattered site basis, right? Meaning to get the optimal diversification, right, it's difficult to do one house in Pittsburgh, one house in Philly, one house in Huntsville, right? So that was a starting point, right? How can we offer that diversification? And the mapping then started with, all right, how do we help our customers to understand that is an opportunity? So first part was, okay, people need to get a better understanding of the macro economy before they start thinking about investing thousands of miles away. So how do we help teach people the fundamentals of the housing market in a really simplified way, right? People that may not have studied economics, that may not have started their career in banking. How do we break down the fact that there is a fundamental housing shortage in the U.S., which is not going to get fixed anytime soon because the issues in the supply chain are many, right? For example, it's really difficult to entitle land. It's really expensive to permit lots. We've got all sorts of issues on building materials and labor, right, that's constraining production of homes. Right, so breaking that down and letting people have a good macro view of the housing market and the rental economy.
How are you guys doing that? How are you delivering information to, say, like your resi investor that comes off the street? Nick comes off, he reaches out to one of you guys. Like, how are you delivering almost that basic entry level information of like, hey, this is the...
We do it, we have an app.
Okay.
Right, we deliver. We've got a product which we call Plotify Insights, right, which is even before you start investing and thinking about building a portfolio with us, you can learn, right, and that comes from a couple of different sources. First, we share third-party news and analysis that is really well vetted. The second is that as a company, we're able to consolidate different sources of data, right? So, for example, there's lots of good data that individuals don't necessarily have access to because it's expensive, and you've got to pay thousands of dollars a month to, or even more in many cases, to access that data. We buy that, right? We analyze it, and we also consolidate, publicly available data. We also have internal data that we're generating. So we publish our findings from that data, right, and share that with our members. So it could be anything from what is the impact of inventory changes on the housing market, and specifically to different geographies that we're looking at, or it could be to do with specific cities that we've picked. But the overarching value is, I think that we offer. And one of the things that we're very passionate about is something that's really missing, we feel, in real estate investing for those busy professionals, right? And that is, okay, you can learn, right, about what the macro situation is, but people invest in real estate for their own very individual reasons, right? Somebody might be doing it to build income for retirement. Somebody might be doing it for tax mitigation. Somebody might be doing it because they just love real estate, right? And what we noticed was missing was this piece in the middle of learning and getting comfortable with wanting to start investing in real estate, and then starting to look at individual properties to invest in. And that is, how do I think about creating a really customized plan for myself based on what I want to do with real estate, right? It's most people just kind of start, and that's great, and it usually works out. But I think having a very specific plan about how you want to invest and what your goals are, and then investing in properties very deliberately that match that plan is really, really powerful. And that's what we do for our members.
So if I came to you and kind of was a little disorganized, it wasn't really clear, I didn't have much clarity on my goals as far as an investor, I come to you guys and I may think one way and you may pivot the other way and say, hey, this market, this investment, this is more kind of your speed, your style.
Absolutely. So I'll give you an example without naming names of clients,
Sure.
but we recently had a young data scientist, machine learning engineer who works at a big tech company come to us, and she's 28 years old.
Probably makes pretty good money.
Yeah, she makes great salary. She's got a great future in her career. She's busy professional, just like we described.
Very into her field, probably as well. It's
Absolutely,
very time demanding.
Yeah, absolutely. Yeah, you got to work.
Consumed.
Absolutely, but loves real estate, right?
Sure.
And she's super intelligent, as you might expect, and very focused on planning, right? So she's 28 years old. I wish I kind of knew this at 28 years old, but she's like, by the time I get to 50 or 55, I would like to have the option of how I spend my time, and maybe I'll work part-time and whatever, right? So that's a 25-year plan right there. And that's one of the things, right? Real estate is really long-term. If you want to extract real long-term wealth preservation and creation, do it for the long term. And so we already had that, and she'd already started her investment journey on her own, right? And so she'd invested in a property. It's a market that doesn't screen well from our perspective. It's a great asset. She's going to do super well out of it. But once she started learning about how she could engage with Plotify to understand what other markets she could invest in and how seamless we make it, right? So once we've created a plan, right, then we start recommending properties in cities that we've picked, right, to those individuals that match that plan. And we walk them through step by step, right, all the financials, the projections, right?
So it's like a financial advisor solely based in real estate.
Yeah, exactly right. And we call ourselves a wealth tech company before a real estate platform, because it's really about understanding the individual, understanding their goals, creating a plan, and then matching that with I mean, it could be any asset. The real estate is incidental, right, to that plan. It's relevant in this case because the individual wants exposure to real estate. But the second piece to that is, how do we, because you asked, how does that map work of those 150 process points? The other thing we challenged ourselves to really try to achieve is, once you've got the plan in place, right, and we're picking assets, the first thing that we do is we use a lot of data to understand where we think the best markets to invest in are, right? And those are long-term sustainable investment markets, right? Let me give you an example. The reason why Gavin just came back from Pittsburgh is because we own, or our members own properties in Pittsburgh. And that was one of the first cities that our data and algorithms told us is a really good investment destination. And it's a good investment destination because the city's been undervalued. It's got really interesting tech migration happening.
It got destroyed with the steel.
Exactly,
with the
right.
steel collapse.
So you're pulling waves of employment, they're like data points like that.
Exactly right.
What kind of generations buying, and selling in the area. Okay, great.
Exactly right. It's really about where do we see the way we say it is.
Where's the best growth?
Yeah, where do we see the most sustainable net positive migration for the right reasons?
Sure.
Right, and that backs into the sustainability of that migration, right? And tech is one driver, not the only driver.
So you guys are seeing basically, you're analyzing Pittsburgh and you're saying, all right, it had some setbacks in the past, and which drove the prices down because people probably fled and because of no jobs. And then now you guys are analyzing it through all your data analytics, and you're saying, hey, this place is going to be an economic boom, and here is where we see a good place to park money, and then people are going to get their best bang for their buck in longer term investments.
Yeah,
that's that's a caveman way to I'm getting from what you're saying.
That is the crux of it, right? The nuance around it is that different markets offer different types of opportunities. So if you think about Pittsburgh, right? And by the way, it's a really interesting point to talk about, right? The history of Pittsburgh is
steel town,
steel town
like
manufacturing.
Most of Pennsylvania.
But what that requires is technical skills, right? Engineers, right? So if you think about factories and production, right? It's not that detached from high tech, right? Which also needs engineers, right? And so you've got great engineering schools, like I think Carnegie Mellon had a top ranked AI program last year. That's driving a lot of tech professionals into the city.
It's same parts of the brain. It's just a little bit different, right?
Yeah, slightly
it's those
different.
people that excel in that part of their brain are going to excel in that.
And then you figure out what is what are the attributes and the features of that city. So if real estate and I'm generalizing here because you have to get, as you guys know, it's street to street, block to block, and neighborhood to neighborhood with real estate. But in general, if you have attributes where there's a bit of an arbitrage, right? The city is undervalued from a real estate standpoint, but you've got disproportionate migration in, which is a leading indicator of where rents could go, for example. That's interesting. And Pittsburgh, in fact, for us, has been a really high performing city, both on the yield side. So it's one of the highest yielding cities because you can buy at value, right? And rents are continuing to grow. But it's also done really well from a home price appreciation perspective over the last few years. But we categorize that for the time being as a higher income market. Now, there could be other markets. For example, another one that we love at Plotify is Huntsville, Alabama.
Oh yeah, I worked for a company in Huntsville.
Did you?
Yeah,
which one
yeah,
was that?
It was called Hometown Lenders. It's now not in business any longer. It was on Bridge Street down in Huntsville. That's funny. Yeah, but I've been down before. But yeah, I actually saw some growth with my own eyes in that area. That's crazy.
But if you start to look at the data and you start peeling back, right, and for me, it's very much about, okay, data gives you one perspective, but then you need boots on the ground and see what's really going on.
Yeah.
And, walk the streets, which is something that we do uniquely, right? We put our team members on the ground to actually see. I was just going to
ask Gav, what does it look like? What does your trip look like? I know you're the CRO of the company, but do you go up there and kind of do your sales thing as well? Like, what's a trip out there look like to kind of feel these markets out?
Yeah, this one was more for kind of acquisition purposes. We have a few assets out there already. I think we have 40 doors in Pittsburgh. So part of it was looking at which ones do we already own, which ones are vacant, walking through what's the turn strategy, like what are we going to price it at, and try and get it back to stabilization. There's also a few that we were just looking at, meeting different brokers, shaking hands with property managers.
I was just going to say, there's always an opportunity.
Yeah, the service providers out there, we want to keep those relationships warm so they answer on the first ring when we call.
Yeah.
There's certainly value to that. And then just kind of getting a feel for all the different neighborhoods, right? So, like you guys said, it's different from neighborhood to neighborhood. And we have our data science team has a ton of great capabilities now to show which neighborhoods show which characteristics and where certain cap rates might be better and prices reach the goals that people are looking for. But we like to kind of go out there and see with our own eyes to say, okay, it makes sense that a cap rate might be super high there and the prices are lower. But understanding what kind of risk are you taking by going for, a higher return up front. And trying to piece together, what neighborhoods are more expensive and why, which one, and kind of balancing out, trying to understand. Like Anish said, people come to us with all different types of, investment goals. So if somebody says, "Hey, I have a budget of X, and that's all I have," then we might need to steer towards kind of lower priced areas. But we want to understand all of the risks of doing that, right? So we can say, here's the what's available to you, and these are the neighborhoods we think might be a good option for what you're trying to do.
Nice.
So what I'm picking up from a more of a simple-minded, hammer swinging individual, you guys are obviously, I could just tell by how you speak, how articulate you are. You're extremely intelligent. You're probably very data analytic. So from a caveman point of view, I'm looking at this as most of these type of investments where you're investing kind of national wide, it has always been once you have obtained almost like major league investment status. Your Cardones and those kind of guys, they invest all over the nation, right? And they look at different patterns and stuff like that. It seems like to me what you guys are doing is making that available to guys like myself. And people
right.
people that are novice, and from start to middle of the ground like myself, and then the people that are already doing all that stuff. You're bridging that gap, and I'm guessing you're bridging the gap with the data analytic mindset, right? And you're doing all that stuff. And are you also doing data analytics for crime patterns and shifts in crime and that kind of stuff? Because crime is we see it in Philadelphia. Philadelphia is a neighborhood of cities. And I invested in North Philadelphia years ago. I recently just sold everything. But crack is what destroyed those neighborhoods. The crack epidemic destroyed those neighborhoods, specifically North Philadelphia. And then all the homes were knocked down. And then the crime kind of diminished because the population diminished. There wasn't many homes anymore. And then businesses came in like Temple University and Temple University Hospital. And now people want to live near it. So now you have an opportunity to invest in these neighborhoods, build them back up. The crime stats are lower now. So they went from the highest crime rate to now lower. And then you have these gentrifications and all this kind of stuff happening and new construction. So you guys are looking at it from a nationwide standpoint on those type of things. And that's just one investment strategy. You're also probably looking at different, levels of investment strategy. So that's what I'm picking up from what you're saying. Is that right?
Yeah, you're correct. And the way we think about that is, right, what are all of the data inputs that will help us to understand the risk profile of an investment, right? So if you think about that journey that you start on, all right, so we want to know what are the fundamentals, right, of a city or a city suburb or some zip codes that we're interested in. So that's really supply demand, right, and where that's tracking. But then there are all these other factors, right, including crime rates. The other big one is schools. Right. What how good are the schools? Sure. Right. And there's specifically with single family homes, but also with other types of residential real estate, that's a huge driver. Right. Good schools means families want to stay in those locations.
I'd imagine healthcare hubs too, like say Philadelphia
exactly
area,
right.
like
yep.
Meds and eds.
Exactly
Right. So you got that, but crime rates are a huge one, and that doesn't really prejudice whether there is, an opportunity, right? A high crime rate geographies at some point could gentrify, as you pointed out, and you get in at
you want to get in those areas early,
better value, right? But it's about risk mitigation, right? And so how we tie that back to our members is exactly what we thought the gap was, which is if we understand you. Mm-hmm. Right, and what your risk appetite is. You might be somebody who's really comfortable with higher risk investments, right? And you're like, I want to go to those neighborhoods, right? Buy at a lower entry point, and I'm willing to take the risk to see if that neighborhood is going to gentrify over a period of years, right? Sure. Other people will not have that risk appetite. They want stable cash flowing, not really trying to maximize the yield, more concerned with I don't want to get into tenant issues or legal issues, right? We all know how that goes, and that's something we also help our customers with. We do everything soup to nuts on the management side, right? So it's full service asset management and investment management.
So people are coming to you, and you're answering the simple questions with a a lot less simpler, more complex answers. But so people are coming to you with the simple questions of why do I want to invest, right? You're asking them that. How do I invest? That's what most of our listeners want to do. How?
Yep.
Where is a huge thing, and you guys are like super into that with the data analytics. And then when?
Yep.
So you're asking those basic questions.
Basic questions, yeah.
And then you're getting, I would imagine, a consultation with your client. You're asking the basic questions, and then you start asking more detailed questions, and then you get a basis of who this person is and where they kind of want to be invested in, and then you say, hey, we have all these data analytics and all these experts, and this is where we think you should be. We have a couple different options for you. And then you talk about how much money they want to bring in, and I'm sure you have different opportunities and different plans, and then you work with them that way. So it's very similar to financial advisors. Yeah. But you're on a real estate, and I've never even heard of this concept before, and it's pretty genius because look at a guy like myself, right? I have I think on my board I'm up to my 112th house right now, right? So I get bored with the same old shit, right? And now I have capital building up, and I'm like, man, where else do I want to go with it? I don't have the time to go learn other markets. I just don't. I know the basics, and I know how to. It's similar to baseball. I know how to pitch. I know how to hit. I know the positions.
Plus, your success isn't going to want you to get out of the market, right?
Correct.
If you got 112, it's like, well, why not here? I could just hang here, live good. But like, there's an ability and opportunity everywhere. I mean, it's brilliant. Obviously, I'm seeing it as, you guys are just financial advisors for real estate. Right?
So I could come to you and say, hey, I have extra capital. I'm going to keep doing what I'm doing, but I have some extra capital. I only need X amount of capital to keep doing what I'm doing. I'm staying in my lane. I'm going to do my thing. I have some extra capital built up. What can you do for me?
That's it. Exactly right.
And you'll call and say like, hey, I want to do a high risk area, multi-unit. I have X amount of dollars. You guys provide that and say, hey, this area might not be where you're thinking. These numbers work a little better in the area.
Yeah, we will provide alternatives, right? And it's very much about a collaborative process, right? And one of the things that we, you use the term financial advisor. We think about ourselves a lot more as a coach to the individual, right? And that's really important because we want to be partners. And this is one of the things that we have learned over time, but also truly believe in, is that control and transparency are two things that most people want, and they don't feel good when they don't have that, right? And so what do I mean by that as it relates to us, right? So we will say, in your case, for example, that you just pointed out, hey, here are some markets that you could diversify into based on, right, we're going to have a conversation, we're going to understand your risk appetite, right, create a plan.
When I want to get out of it,
exactly.
5 or 10, 15,
exactly,
20
right,
years.
Right, and then we'll simulate that plan. We're like, how much capital do you want to allocate? Is it one chunk at the beginning, or is it going to be over a period of time, right, which you're going to build up? And we show you what that looks like over the life of the plan, right? And that plan could be 10 years, it could be 30 years, it could be generational. We have members that are buying in trusts to hand down to their kids, right? So that right is helping you to think through the plan, right? But we will be it's a consultative process, right? So we'll be like, does this match what you were thinking in your head? Then when we start to recommend assets, it's not just about, hey, here are the assets that you should invest in, or you might want to think about this market. We will spend the time through our platform and in person, and that's a trick, right? This hybrid approach of maximizing efficiency through technology, but still having the human touch, right? Just like we go to put boots on the ground in Pittsburgh and other markets that we're doing. I think it really works, right? And that's what people want. And so now, right, we will help you to understand those individual assets. We'll walk through them, but we sort of we call it the eye doctor test, where we'll say, does this property resonate better with you, or does this one? And you'll say, okay, this one, right? And they'll say, all right, well, here are now a couple of options.
So you're not just telling people what to do; you're giving them different choices. Yeah, and here's a couple forks in the road. Which one do you want to get?
Yeah, exactly right. We're helping them to make that decision, and that's really important because it makes them feel evolved. It makes them feel in control. It helps them to be their own portfolio manager.
I was just going to say, because when you're, when you want to get in the market and you play around, your advisor's generally going to say, no, you're not doing that. Hey, I want to buy Bitcoin. No, you're not doing that. You don't have any control on it, right? You see your portfolio is performing well this month, but you don't know how. Why? Right? So it's like you don't even know what to do. You just got to ride the wave, and you guys are giving the opposite. From my level, do you guys work with like a lot of just like residential real estates in the area, agents in the area? I mean, because obviously the viewers are going to listen and say, well, what makes these guys? Obviously, you do a little more from the data standpoint, but like from a local real estate agent, how do you guys consider yourself separate?
I think that the first thing to say is that what happens after you transact, right? And you've bought a property, and you guys know this well because you're in the business, right? Everything from making sure that your LLCs that you're purchasing through are the right structure, they're in good standing, they're compliant, right? We do all the filings, we do all of that.
Getting your K1s, everything.
Exactly, right? And so,
which is a monster headache for most of our investors, right? They want to invest, they have cash, they don't know the first step, and we're like, hey, put your LLC in place, and they're like, well, how?
And actually, one of the things about what we do, which we didn't articulate earlier on, is for the most part, our members are building their own portfolio, so they own it 100%. Right, so it's not a fractional platform where everyone's buying $1,000 worth of shares in one house, right? That we don't do that. But
it's not a pyramid scheme.
Yeah, exactly. Right. So I should be careful what I say. But there are plenty of good platforms out there. Sure. But the
you guys are more personalized.
Yeah, we're more personal. We think that the bulk of the market wants to own 100%, right, sure, of the assets that they're investing in, right. So the LLCs is one part, right. Then doing that, and this is a really important concept, which is more important the further away you get from the asset, right. You can hire a property manager. There's plenty of good property managers out there. There's plenty of bad property managers out there. So knowing which ones to pick, right, how to drive performance from property managers, because don't forget, the incentives are a bit misaligned, sure, right? Because property managers are getting paid off your gross rent. You're interested in your net operating income, right? Which is after all expenses, right? And those two things are not aligned, right? And if you know real estate, you know that driving the property manager to do things in a timely fashion at the right cost is super important. So we do that on behalf of our customers. And then the benefit that they get is that we drive down the cost, right? So, Gavin just mentioned that we've got already dozens of doors, will probably be hundreds of doors soon in Pittsburgh. So we're able to drive down that property management cost and pass it on to our members. Right, so that's the second point that I made. When I talked about control, I talked about transparency.
Almost like group rates.
Yeah, exactly right. It's group discounts, and same thing with insurances, right? We will bulk insure and we'll pass the discount on to the customer.
And you're shopping around the insurance, so you're doing all the hard.
We're doing the lift,
back office shit that nobody wants to do.
Exactly, and we're so passionate about that piece, about driving performance. And if you think about, and that was the other thing when we challenged ourselves to build Plotify, is a lot of tech companies are good at improving communication and improving, the process, right? But they don't necessarily focus on driving that performance. Now, give you one example of everyone's favorite topic: property taxes, right? Not a lot of people know that you should be questioning your property tax, right? And there may be an incorrect assessment, the invoice may be wrong. How do you get that refund back? Right. So we will do all of that back end work, including downside scenarios. Right. So if there's a delinquent tenant, how do we work to get them on a plan? Or how do we evict if we have to? Right.
Eject.
So we do all of those things, right, all the way through to delivering our members a hygienic tax file at the end of the year, that if they are self-filers, they know exactly what number to put in what box in what schedule.
Or if they have an accountant,
just integrate it into
their
the return.
Loves that concept.
Yeah, and then the other piece to it is too that because we try to think about every single pain point, the other thing we thought about is financing, right?
That was my next question. I was just going to say, hey, when you guys do find a location, an area, price point, how, if I'm not licensed, say in California, right, but they want to use me as their lender, what other options would they have from a financing standpoint?
So it's one of the things that we spent a lot of time thinking about because the first thing to understand is that financing is actually a parallel process, right? When you're investing in real estate, it meets at closing, right? But you're going through another process with the lender, right? While you're doing your diligence on the asset, and then there's overlap, of course. And so the way we thought about it is that wouldn't it be cool and really valuable to our members if they decided to get financing on an investment, that we could provide that without any additional process or lift for them. And our original concept was, when we started Plotify, is that we will partner with lenders, specialist lenders, right? The problem with specialist lenders is they have a lot of requirements, right? Even if you're doing non-recourse financing,
sure,
there's still a process.
They have their own overlays. And
it's expensive.
Yeah,
right?
absolutely.
And so expensive both in terms of the fees, but also the rates, right? The spread that they're making
sure,
on rates. And so one of the things that we really tried to think about is how do we create a solution which doesn't put any more burden from a process, because we've already solved, like literally when you buy a house, that we are recommending based on your plan, you can do that on 4 clicks in the app, right? And if you want financing, the way we do that is that right now we've showed you a couple of houses and you say, all right, let's go with this one. Now we ask you about financing. Are you interested in financing? Actually, we ask during the plan formation, so we've got an idea, but we confirm that, do you want financing or not want financing?
Some people might just be stroking a check, right?
Yeah, exactly right. So and there's cash buyers too, and that's fine, which they can do. But if you want financing, what happens at that point is that we will simulate that for you as well. So we'll say, hey, here's what it looks like if you get an interest-only loan. Here's how much you can borrow to keep your cash flows positive, right? Not go into negative carry.
So
right?
you're also analyzing all the financial options.
That's right.
And giving them numerous options to choose from.
That's what
right?
a lot of lenders say and promise they're going to do for their
clients. But when you look
don't.
at it on a spreadsheet, right, and how it impacts your returns, right, that's what people really want.
And you don't really have, where Ryan just touched on, he said that some lenders will say that they're doing that for you, but really, I'm not going to speak for you, but some of these lenders are going to steer you into the one that makes the lender the most money.
Well, that depends, right? From a branch standpoint, you may want to utilize, I mean, that's really, I don't think you're doing that loan to loan, right? To make the branch more money, you really have to have the consumer in mind when you're kind of putting that together. Curtail the plan, obviously the same way they would. But their reach is just so much different than ours, right? Because you can kind of, to your point, so retail lending is expensive, rates are high.
You don't have any incentive. You're not making money on the financing.
No, we're not.
So you're really saying, here's your options.
Yeah.
This is what we think is your best option, but what do you think?
But what's really interesting about the lending thing is, and our journey, right? This is what happens when you start businesses as an entrepreneur. You got to figure out solutions when you come up against the wall and you can't find the right solution. So what ended up happening with us is when we designed Plotify, we knew we wanted to have a financing solution. We're not a lender.
Sure.
Right. And so we went and talked to lots of different specialist lenders that knew, residential investment properties really well. We couldn't get there from a partnership perspective, either because, we were.
I was going to say we tried with platforms like this plenty of times.
We were a startup. They're like they didn't believe that we'd be able to execute and start, which is fair enough, right? I mean, it's a high risk proposition, or most of them would say, we need to know the customer. We need to know who's the individual. They've got to go through our process, right? So there's no additional benefit to our customer for that. Or they would just price them too high, right? With that risk premium. And so what we ended up doing, just to prove the concept, we talked to our lawyers and we said, nobody's giving us the structure that we want. How do we stand up our own lender?
This episode is brought to you by Baker Street Partners. Baker Street Partners is a company that specializes in real estate development and restoration in Manayunk and Roxborough. The team is dedicated to enhancing the distinct character of our neighborhood. They have an exciting new project underway, restoring the former steel mill that they call Trent Manayunk, which is going to have some new construction next to it, as well as parking. Those interested can join the wait list to find out more details and what's to come at www.trentmanayunk.com. They also have 6155 Ridge Avenue, which is a new building that sits right along Roxborough's business district with units available to lease now. You can contact them on their website, www.bspdevelopment.com, their email address, rentals@baker-partners.com, or Instagram @Baker Street Partners.
So we stood up our own lending entity, and the only reason we did that was to prove that our model would work. So, I forget the number now, but it's like something like our first 25, 30 properties, we are also the lender to. And we did that in a completely separate off-balance sheet company. There's no commingling of risk of any kind. But and we learned a lot, right? And we were able to prove that if we can educate our member on what the financing options are, right? Here's a 30-year loan, here's an interest-only loan, allow them to, again, make the decision, right, with the right data and simulation and what does it look like over a long period of time, that's really good for them, right? And then what we're able to achieve is the ability for them to just say, yes, I want financing and I want this LTV. And we're pretty conservative from a lending standpoint.
I was just going to say, from a qualification
right.
standpoint, are you just going to go pretty super conservative from like a debt to income credit?
Yeah,
obviously,
but it's also better for them, right?
Sure, of course.
Because what happens with a lot of people, and we see this quite a lot, is that it's very easy to get in over your head with real estate, right? With overexposure, over leverage, right? And in particular, if you're not locked into long-term rates, right? But what is really powerful about, the U.S. has one of the most flexible and liquid financing markets in the world, as it actually for any asset class, but as it relates to real estate, right? And that's accretive for people. So what's really interesting is helping people to understand. You talked a little bit earlier, you mentioned, right, when should we invest? I'm a big believer in dollar cost averaging, right? So, you're never really going to be able to time the market. I mean, coming out of 2008, 2009, 10, a lot of people did some really great trades, out of the foreclosures. But it's very difficult to time the market. But if you think about just the long-term trajectory of asset values, right, going in one direction.
Real estate always goes up.
Right. Now you think about, all right, if I'm buying today, right, my entry point is X, right, in 2 years it's going to be X plus whatever, right? I'm better off buying now, even if the rates are higher and financing, as long as I can manage the cash flows well.
This
right?
is music to this man's ears.
Yeah, I
Right?
love it. Yeah,
Right, because I can refinance later on, right? And it's one of the most powerful
You're
tools.
getting real excited
Yeah.
about talking about
But
it.
it's so screaming for 3 years.
Exactly.
Honestly,
right.
just get in the game. Really.
Get in the game, right? And so rates will, I mean, as a matter of fact, our opinion is we will be in a prolonged period of higher interest rates now.
Agreed.
Mortgage rates are going to be higher. I think actually...
when the rates drop down, the prices go up.
Exactly right. It's right. So there's all
To
sorts
his point,
of benefits.
exactly. It's like you just got to get in because it's better buying now. Here, when rates are higher, acquisition could be a little lower. Then
So you were looking for a third party financing options to the best options to provide to your members and clients. It really didn't exist. So you were like, fuck it, we're creating it.
Do it ourselves, right? But what that led to for us is, and we still said that we're only doing this to prove the model. So now we do have partnerships with several lenders, and and we will continue to build our own lending book too. But what we always
You
do
establish the
is-
model that works.
Exactly.
And then
right.
once people
So
see
now
it
that
works,
we
they're gonna
see
jump
it,
on board.
okay, a DSCR specialist, a non-QM lender will come to you guys and say, okay,
That's right.
Now all of a sudden the appetite looks good, right?
Yeah,
Because-
absolutely. And also, I think there's lots of opportunities for us as a business to build our lending book with cheaper cost of capital, which we're already working on, that's going to drive rates down for our customers, right? And because that's our goal.
Means more money in their pocket.
Exactly right. Better returns, more flexible types of financing, right? So we really want to change the game, but we want to take lenders along with us, right? And we always keep in mind we want the best solution for our customers. And to that point, I think that one of the things that's been really powerful about the platform, we talked about how we really wanted to go end to end, and now we've also proved with our first cycle of assets, right, the model that I talked about right at the beginning, which is how I started my journey. Those assets have gone up in value, right? We are very proactive in communicating with our members on a regular basis to show them how their portfolio is doing and performing, the good, the bad, the ugly. But you get to a point where the asset value's gone up, right? Then
It's time for you to sell.
Liquidity, right? And so we can show sale options. We don't obligate our customers to sell on platform, right? So we want the best outcome for them. So if we can sell it off platform through brokers, that's great. If we can sell it on platform, which is more cost efficient.
So another member might be wanting to get into that.
We've
market.
already done that.
And this
We've done
I
person
was
got
just
in
going to say,
early,
member
so
to
they're
member,
buying
kind
it
of
from
exclusive has to be
Exactly
pretty nice,
right.
right?
So
off market, no realtor fees.
and it's T+1 settlement, right? There's no change in title because we're just selling the LLC, right? And then the other piece about it is, which is really working, is the sale isn't always the best outcome. The most tax efficient one, of course, you can do 1031s, right? But which we've also operationalized, and we've also
And
operationalized.
you help people with 1031 exchanges as well.
We do 1031s. You can invest through retirement accounts on the platform.
Our listeners can Google
Right.
1031 instead of us explaining. that.
Exactly
It's
right.
Let's skip
very
that.
simple to fucking just Google that.
But what's really powerful is refinancing, right? Which is a tax efficient way to get money out, right?
Yes.
And we've proven that too. So with several members, we've already gone back with assets that have gone up in value and say, did you know if you refinance this now, the economics still work from a cash flow perspective, and you can take this much cash
you could
out.
have potentially, here's $100,000. You take $100,000 loan, and because it's a loan, it is not taxable income.
That's exactly right.
And you're just going to say, hey, I'm going to take 100 G's out of this right now. I'm going to put it in my pocket. It's a loan. The tenants are paying down the loan. And then you do that every couple of years with different parts.
Different assets.
That's a whole financial strategy.
So
that a lot of
it
people
is.
do.
And
but that has to be a high growth area. It has to be
it's
an
a high
area
growth area.
that's really value growing.
Yeah, but also if you just think about that trajectory over time, right now, just go back to the beginning. Right now, we know our customers really well. We know that they're investing for 25 years, right? Hopefully with us, and we know exactly how much capital they're deploying. We know what assets they've got. We know how to
You could double their portfolio with
advise them. So
refinance.
and basically, what happens in most cases is that cash out that you just referenced, they will use that to buy another house,
Sure.
or contribute to buying another house.
If you're looking
right?
at it, if you're in this for a longer term goal, and I'm sure you probably have to remind people of this, because sometimes we as investors are like, oh, I can take some money, right? The longer you wait to take money, the higher it's going to be when you take it.
Right.
And if you're reinvesting, so you're giving them options of, hey, your property that we helped you purchase went up in value tremendously. There's a 6-figure of availability there, and the tenant and everything still covers it, so it's still cash flowing. Let's take that 100, refinance it. We have the ability to help you do all that. Boom, let's go buy you 2 or 3 more properties.
Here's the next one. Yeah, exactly right.
And now you take maybe a 1 to 2 unit portfolio into a 3, 4, 5, 6 unit portfolio. Rinse and repeat.
Exactly.
Now when they retire, instead of having just one, if by them doing it themselves and not even knowing this, you guys are analyzing. You could turn somebody into having a ton of portfolios, and then for that 28-year-old girl that you mentioned, you could basically take her, and her goal was at 55, I don't really want to work if I don't have to. Well, now, hey, she has millions of dollars in real estate. It's the American dream.
That's exactly
and
right.
it's obtainable, and a lot of people don't realize how obtainable it is.
It's so true. You explained it Exactly right. And you know, the other thing that we're
that's my high school.
Yeah, exactly. It was great.
Coming in handy.
I think we need to leverage that and use your pitch. But what's really amazing about this opportunity is it also helps. I think Gavin said right at the beginning, right? There's tons of young folks, right, who home ownership is on their mind. Mm-hmm. It's expensive.
It's a big goal for people.
It's a big goal. But now...
A lot of experts are trying to tell people it might not be obtainable in 5, 10 years. Like, it's going to be harder.
And even though there's lots of ways to cut that cloth, right, there's lots of incentives that are available, it's still really hard. But this is a really great way to get the same exposure of using the best performing asset over the long term in the world, right, to build your wealth. Right, without having to purchase your own home, and you can choose to do that
without having to become a subject matter expert.
That's right.
You guys are solving it for them. So I have a question.
Yep.
The communication. You've talked about the communication in it. What does that communication look like? Because some people want different communication. Do you offer that? So I would imagine that the 28-year-old data analytic person probably doesn't want to talk on the phone for 30 minutes to an hour all the time. She probably wants detailed emails that she can analyze real quickly. Be like, yep, I'm going to make that decision.
Yep.
You have a guy like me, I want to talk on the phone to you.
Yep.
If my money's gone somewhere, we're having a fucking conversation about it, right?
Exactly.
So I don't want an email with all this stuff, right?
Yeah.
So do you offer, are you doing Zoom meetings? Are you doing in-person? Are you doing phone calls, emails, texts? So is it basically however that person wants it to be?
Yeah, I think that so all of the above, right? There's optionality there, and that's part of the journey of getting to know our members, right? And we have everyone from that 28-year-old to people that are in their 60s, right? And more mature. They've got a lot more capital to deploy.
Sure.
They want safe, secure investments. And there's a correlation between, not 100%, but it's between age and the use of technology 100%. And more wanting to be on the phone, right? So, but the way we do it is that first and foremost, we do deliver via the app, via email, we're revamping and building a whole new web portal, which is going to be really cool, where you can do all these simulations, see all your documents around your properties, including the title, the LLC, and so on and so forth, right? And all the analytics around each property.
Keeping us real estate investors organized, right? Because it seems like every year for a lot of us, part of the headache is, I got to get with my property manager. I don't know where my receipts are. I don't know if my rental license is good.
It's such a pain point.
It's an absolute nightmare each year for most families, small investors, mid-sized investors.
So you've got all of that. But then what we do is, right, we do, right, so you get monthly statements, right, that we publish. You get quarterly distribution reports. You get your tax packets. We schedule regular video calls, or to the extent they're possible, in-person meetings with our members. We walk them through a presentation type format, which is available on the web portal too and on the app, so they understand exactly what's going on, right? And it goes through all the details, right from marking the asset to market from a value perspective, an asset management report in terms of what's happened to the property, right? Is it cash flowing well? Are there issues with it? Right, what the solutions are. So we do that in person. Sometimes there are phone calls, and so we are a tech company, sure. and so driving everything towards the web and our app is important. It's available, but I think this is part of the practical solution, right? Is that hybrid? I'm not hung up on, a lot of people want to say, like, you will be 100% online, you're a tech company, and that's how you're going to scale. I think for us, the point is that we are helping people to deploy hard-earned money,
sure,
right? And it's not $1,000 on a fractional platform, right? It's at minimum, right, the entry point is $50,000 maybe on a low-value home, which is financed, all the way up to portfolios that are already in the millions of dollars,
sure.
right? And right, when people are, like you just said, right, it's you have to respect the way people want to communicate
and want to operate,
and want to operate.
Now, how do you guys get paid? How does Plotify get paid out of this?
Yeah, we have a very transparent fee structure.
Okay.
there are two fees that we make. One is at transaction, so when somebody agrees to buy a property on the platform, we charge a fee which is for the diligence, the structuring, and making the transaction frictionless.
Sure.
That's a 4% capture,
Okay.
right? And that's mitigated by the fact that hopefully we buy well, and number two, we also have our brokerage cover, which we're just about to launch, so we can reduce the commission burden. So it's not actually.
You guys are
net
doing
4%.
a ton of stuff. So it's like that's why I'm wondering, like, how.
Yeah.
In my mind, the whole time you're talking, I'm like, they're doing a lot of a lot of stuff. You're like,
I was going to say, our real estate agent probably are going to hate it because they say, hey, we charge like 2.5%, right, around this area. So you guys are kind of right,
you do
sliding right under that.
Yeah,
we do
a lot.
way
a hell of a lot more
more
than a real
And
estate
then
agent.
on an ongoing basis, we charge an asset management fee.
Yep.
Which is 1.5%. And the beauty about this is
like an active manager throughout the year.
that's right.
Okay,
and
good.
that's all built into the projections, though.
Correct.
So they get to
All built
see
in.
it. Here's the projections.
Right up front.
There's
all
no
broken
hidden
down.
fees.
No
There's no
hidden
back
fees.
door. You get slapped in the face at the end where you're about to make a transaction. Whoa.
And also, by the way, when you do the analysis, right, and you're exactly right, the value proposition is really high because we're able to price the way we do. And even if you think about that 1.5% asset management fee, right, a lot of that is mitigated by what we talked about earlier on, right? We're driving down the property management cost, right? At retail, somebody might pay 8, 9, 10%, right? We pay a flat fee in Pittsburgh now, right, which is really low. To our property manager, we pay or we pay 4% or 5%, right? That saving gets passed on directly and transparently to the
So you're not piecing it all together, kind of like your traditional mortgage transaction. You're not calling your HOI guy, who's a totally separate group. Your whoever, I guess, myself, your lender, your real estate agent, who's going to negotiate their fee, right? So, kind of, we don't know all that cost. Each individual cost and everything going in, everything going out.
And actually, when you see the properties that we recommend, which, by the way, they've already been through with this part we didn't talk about, right? We talked about how we pick the cities or the zip codes that we want to invest in. But when we pick the houses, right, by the time they get to you, they're not random houses. Right, we've developed
overly analyzed. Already.
Yeah, we've developed this 90 data point.
So if Nick's a multifamily
scorecard,
investor that's looking for this kind of return, you'll have those.
Hey, this fits. This fits the boxes.
It's already passed our test, right, to be good enough for you to invest in, and then you say, "Yep, let's go for it." And then we have additional layers of diligence after that. But the point is that the what you're paying for versus what you get is a high value proposition for our members, and that's starting to prove out.
Now, the other thing I want to know is the young man next to you. We were talking before the show started, and he said he left a pretty big company at a young age to come work with you. And what was that like? As a 25-year-old at the time, what was that like? Is that a huge jump? Did you have pushback from your parents? What was that like? Because you're only a few years out of college at that point. And you're doing pretty goddamn well for yourself.
You're rocking and rolling, big job. And then how did you get out of finance into this kind of finance or tech?
It was definitely a big jump. I had done a year at Deloitte, like I mentioned, and then I moved up to New York and worked for 2 years at JP Morgan in their private bank, which is kind of wealth management for the upper echelon, I guess. And doing well for sure, but working at one of those companies is not always all it's cracked up to be. And I kind of knew early on that long term, I didn't see myself staying at like a big company and wanted to work on something new that I was kind of a part of building. So I was kind of looking around for something that was a bit smaller, like newer, and there's a ton of
passionate about.
Yeah, and have some kind of ownership and responsibility for building something. So I had some friends that were working in different like tech startups and venture capital ecosystem in New York, so I kind of networked around that way. And then I think the way I met Anish was a friend from college who introduced me to a friend of his whose boss is Anish's wife. So like through that chain, I got hooked up with Anish, and then we met a few times. And I think the intention was for me to like work kind of part-time, like after work a little bit. Like, I mean, I guess technically I shouldn't say that, but we did that for like a couple weeks. I don't even think it went for a month. And then Anish was like, let's just,
This needs to be full time.
yeah, are you ready? And I'm like, all right.
So what was it about the company, the concept, and specifically Anish? What was it? What was that one thing where you were like, all right, this is it? Like, what was that thing in your mind that like clicked? Was it just Anish's ability to talk about how passionate he is in the project, or what was it to you?
That's certainly a big one, right? I mean, you can probably hear how passionate he is about this mission, and so I wanted to be.
It's clear and apparent.
Yeah.
It's right away you can tell that he's.
And I'm thinking to myself,
he's
how the
invested
hell
in
is this not around? Right? Like, why is this not a bigger thing?
Yeah, there was definitely that too.
hard to
Even
do,
5
that's
years
why.
ago, I was like, why does this not exist? It makes too much sense, and like let's do it. So there's that, and then I also definitely did some reference checks. Right, got on the phone with other people at the company. I was like, hey, is this guy legit? Right,
Yeah.
and yeah,
Sounds too good to
He's
be
a
true.
hell of a salesman.
It almost sounds. It almost sounds too good to be true.
And I
like
think-
it's a very.
Yeah.
It's like one of them companies. Like I don't know anything about the company.
See, I know guys that tried this obviously before, but to scale, it's hard, right? Because they're
Yeah.
trying to use their preferred people, and it just doesn't work. To your point, like some companies and some other vendors just have different overlays. You can't make the business work. To your point, like, so that's why you guys created the financing part. Yeah, I mean, obviously, this is one of the more fascinating businesses that we've had started on.
I'm very interested.
Yeah, it's like, it's crazy to think. So, like, my one question for you guys is, how do you get the investor to out of their comfort zone, right? Because guys like Nick, myself, will stay local. They have, hey, I just want to stay in Fishtown, or I just need to stay in Manayunk. How do you, is it just the numbers, or are those clients already coming to you like, hey, I'm pretty much ready to take this risk, so you take me wherever you need to?
I think that, you know, from my point of view, there's two things that are important, right? The first thing that's important is to know who is a good customer for you, and not try to be all things to all people. We're trying to be all things related to real estate in that journey for a specific type of customer.
So there's some customers you may say, hey, we're just not the fit.
I was just going to say, because you got to fire people just like we do.
Yeah, that's right. So you know, what's interesting is, right, typically we're not a good fit for people that want to self-manage, right? Because they have a certain type of desire or need, right? And you know, ours is you get all the information, you get to be in control of entry and exit, right? You get all the data. But
Hands off the wheel,
and we'll talk to you. We'll give all you think, but we're doing the executing, right? And so there is a
What
line.
you're paying them for anyway. Right?
There is a line. That being said, right? For example, for you guys, right, and folks like you, there's usually one driver, right? And for you guys, it may be diversification, right? You've got concentration risk in this market, right? There might be some unique dynamic. I mean, this is a great market. We love Philly, and you know, we've got some assets here. But the, you know, diversification is a good thing,
Absolutely.
right? And that could be the driver. So I think it's pinpointing that one thing that is going to drive people to do that. And, you know, I also just wanted to go back to, you know, Gavin joining the team,
Oh, yeah.
right? What's really interesting from Plotify standpoint is that it's a big vision, it's a big mission. It took us a long time to build and test this
Probably
engine.
a lot of capital.
Yeah,
on
a
your
lot of
part,
capital,
too.
right, and time and effort and learning, right, and you can't do that without great people.
Sure.
Right, and so one of the things that we focused on a lot is not just you know, throwing money at trying to hire lots of people to solve the problem, but being very thoughtful about who we hire, when we hire them, and Gavin's an integral part of that, right? You know, when I met him, the other side of the coin is I already knew straight away when I met him that he's somebody that I could A, work with, B, was going to be a really important team member and partner, you know, in Plotify, and that has proved to be the case. But even more so, right? I'm very passionate about this too, which is, as you grow a company, how do you optimize your org chart, right? And with startups, it's tough because, you know, the people you need in the first 6 months are different from the next 12 months or different from the next 36 months. I look at the org chart. I love sport. different sports to you guys. I grew up in England, so it's
Football.
or soccer is called here, or in cricket, which is a little bit like baseball. But I love looking at the org chart like a sports team, right? And we want to win the league.
Sure.
We want to win the cup, right? What's the team sheet? Now, are we optimizing each team member in the right role? And so, for example, Gavin's had different critical roles, right, within the company as we've evolved. And that's been really important and powerful for us to be able to do. We don't always get it right, and nobody does, but it's about just being honest with what's working and what's not, and how do you try things that are going to optimize. So that's a really important piece about how we're building too.
So people and processes.
That's
So
it.
how did you land in this role? Well, you had that financial background coming from JP, so then you came over and you didn't really know what your role was actually going to be, right? Because it's ever evolving, it's moving quick. Like what does your day-to-day kind of look like with the company now, and where do you see it moving in the future?
Yeah, it's certainly evolved. When I joined, it was mostly kind of like a chief of staff type of role to Anish, so it's like kind of whatever he needed at the time, and that would cover literally everything. So from fundraising to sales, operations, like whatever. So that got me definitely exposure to just about everything, and like really in the weeds with everything, and kind of getting my first taste of like operating a business, right? I've sat at the 30,000 foot view at JP Morgan, but not like actually operating a new business is a much different proposition. So I did that for a while, and then I guess I focused a little bit more on acquisitions for a bit and getting that system up and running. So that was kind of my main focus for a while. And then as needed, it's kind of transitioned more into the sales and marketing piece, because I feel like now that we've gotten the operations to a point where it's working and we're servicing a client base, and we kind of have the people, like Anish said, that are specialists in certain roles operating their teams as they need. Now it's just about kind of getting the word out and getting more customers through the door. So now my job is a lot of kind of client conversations and partnerships, and hopefully we turn into movie stars and start doing more.
And honestly,
podcasts.
yeah, right. I mean, look, this stuff is great, and this is what we discussed. When you and I met, we met through one of my clients, Connor, which now makes total sense. He is the perfect client for your company, obviously, because when he made his move, I said, wow, this guy's taking some risk, right? He's in a market.
Yep.
Not living in the area, right? Which is
Exactly.
a big, like, man, he doesn't live here. He lives in Texas, but he's going to drop whatever, $500,000 on a rental. But he saw it was all numbers. It didn't matter to him what the acquisition. He knew the numbers, and it didn't matter. So he was like, "This is where I'm comfortable at price point. If we find it, I'll buy before I go." And it was like, and then we linked up with you guys. Obviously, your follow-up game's great. We're working some transactions now. But what does this go to? Like, are you doing a kind of southeast part of the country level, or northeast part, or are you going nationwide? Because I feel like this needs to blow up, and if it's not going to be you guys, it's going to be somebody else pretty quickly, right? So like, how do you kind of get in front of that?
I think that, look, for me, when you start a business, it's really important to understand who you are, what your value is, and what your competitive moat is. One of the reasons why I agree with you. There's plenty of people that have thought about doing what we do or tried to do what we do. The reason why it doesn't exist in the way that we think it should exist is because it's really hard to do. Yeah. Right. It's like you're not right. If you think about just that first piece, helping to advise people on how they should be investing, that doesn't have any of the physical attributes of real estate. Right, or all the nuances around investment structures and taxes and so on and so forth.
You want to keep the personal connection.
Yeah.
And if you get too big, you lose that. So that's the whole. That's
why,
always
like,
the battle.
Zillow doesn't work.
That's always the
Zillow
battle
tries to
of
get
growing
into
a
finances.
business.
And so to me, it's very much about when is the right time to scale. Right, and there is no doubt that we want to build a big business, and we can build a big business, but getting the fundamentals right. Having and like I said, we're very, I think, honest and transparent about the fact, and we talk about the fact that we didn't do this quite right, and we need to improve here. We didn't service this member in the right way. We need to fix things, right? But getting it to a point where we're comfortable to now scale the engine, which is I think where we're at now, is really important, right? So competitive threats are always going to exist. There's going to be tons of smart people that we're going to compete against. The market is big.
Or somebody wanting to come in and just offer you way too much money to walk away.
Yeah, exactly.
Well, look, I mean,
Right,
that
yeah.
eventually is a decision that any company will have to make.
Yeah,
right?
and we've got strong governance. We've got a great board. We've got great shareholders. We would make decisions in conjunction with them. But the main point is, right, we are on a mission, right, and we want to do things with the member or customer in mind first, right, and providing real solutions for them. And so I think that focus is really what we're about right now. And to answer the question, it's not that difficult for us to grow geographically on the asset side because we've got the system set up. We know how to move into a new city, right? We know everything we need to set up, including the property management side, which is the biggest piece, right? So scaling assets, across the country is not an issue for us. On the flip side, which is the customer side, we've already done a ton of piloting. We literally just finished our first pilot with a partnership with a wealth tech company. And we will be launching that more formally in 2025. We've also partnered with some athlete networks. We've got some baseball players, some basketball players that are already members of Plotify, customers of Plotify.
Just what high net worth individuals don't have much time, but they want to get their money.
They want to get
and
their money
they're
in. Yeah.
all over them.
Yeah,
And you want to protect them from blowing their money.
That's right. Exactly. Yeah, and so there are these pockets of partnerships that are really great for us. And the other thing we didn't really talk about, which is also part of the DNA of our organization, is that we've also operationalized offshore investors being able to now use our platform to buy U.S. assets, right? Which is great for, if you think about it from an outcome perspective. The more participants that you can have in a market, the better the liquidity, the better the outcome, right, for incumbents, right, people that own assets. So we've already got, for example, customers on the platform as far away as Singapore, and India, and the UAE and the UK that have bought houses in the US on our platform. And that's got additional layers of complexity for people that don't understand it. It's more to do with it's harder for them to get financing in the US, and they've got additional tax burdens, right? There's all this regime called
you're talking about customers, and what I'm thinking of, what keeps coming and popping into my mind, is the listeners that reach out and ask, or even my friends, and I'll have a quick story about that.
Yeah.
So people asking, hey, I really want to get involved in real estate investing. I have this job, I'm focused on my job, but I want to diversify, and I want almost a side hustle of, but I don't want to, this is what I get all the time. I don't want to manage. I don't want to deal with people, right? I don't want to deal with tenants, right? That's what I get all the time. Hey, I really like, because they're like, hey, but I can see you're doing it. And like my friends are very, crude and cavemanish like myself. They're like, your dumb ass is doing it and you're succeeding. Why can't I? But then they're like, hey, I don't want to manage
you put in the
people.
hard work.
Yeah, they don't want to do anything.
So like Bell's grabbed me the other day. We were watching the Eagles game over Steve O's house, and Bell says, hey man, I really want to get involved in real estate investing. I everybody tells me I should buy rentals. I'm successful in my business. I've been working for years. Me and my wife, my kids are going to college now. I really want to get involved in it, but I don't want to manage everything. This is a perfect platform for a guy like one of my best friends to say, hey, you don't want to get involved in it. You don't want to learn everything about it. But you just want to put your money into something that a bunch of your other friends are making money on without having to do all the hard work that we're doing.
Yep.
This is
exactly right.
This is the solution to most of these, or
to
most
a lot of our
friends'
clients.
problems.
And as we kind of get going here, because obviously we could go for hours.
This
is a totally fascinating concept. But what is that? Now as in all things, as a consumer, I'm scared. Why would I call Plotify? I don't have enough money. What's the entry point? And as we kind of put your stuff up on screen, like where do we find you guys? What's the first step to get a hold of you? Because I have so many cash investors that could call today.
Yeah. So how you find us is through our website. You can book a call. Feel free to share our details. It's plotify.co. One of the things that we haven't talked about yet, and again, I know we're almost out of time, but the start of the journey is a really important one. And one of the things that we've learned is that there are people that don't know how to start the journey. There are people that do know how to start the journey, but they might not be quite ready to invest yet. Or they're still saving to make their first thing. And one of the things that we've uncovered, which we are already starting to design and pilot, is how can somebody leverage our platform to learn?
Sure.
Right. So even before they want to get to the point of pulling the trigger of, or even talking about a specific plan. It's like, hey, I don't know that much about real estate. How do I learn a little bit? I don't have hours and hours to do a course and pay thousands of dollars to do that. I need a crash course, right? I need a coach, right, to tell me what are the things I should be thinking about. Then I'm going to get to the next level. So we're piloting this membership model where people can pay a subscription fee to learn, right? And some people will take 2 years to get to a point where they're ready to invest.
Paralysis by analysis.
Yeah, and that's what, you know.
You guys are solving a lot of that though for people.
Yeah, we are, but also I think that, you know, the thing about human behavior is that even though, right, we like to move in packs and we like to follow for the most part, everyone has their own process. Everyone's mind works differently, right? And so it's really important that to us that before people pull the trigger, that they are comfortable,
sure,
right? And you know, they know what they're doing, right? And so so there's this piece that comes even before that, which is the education piece. And I think, right, that's how people can get started in a worst case scenario. But yeah, we love to engage with folks.
Are you guys on social media as well?
You know, we haven't done I would say a great job historically.
It's not your focus, right?
Yeah, it hasn't been our focus. We are we just decided to hire somebody on the team to focus on that, who's starting I think next week.
It's free marketing, man.
It's so we're just getting there. You know, we will always because this engine is so complex, right? We really needed to, right? We took 3 years to build and test this. Right, it's not like, you know, throwing up a website and solving a process and let's go. Right, there's a big back end.
Yeah, and I feel like if you start launching on social media, you have this out there, the floodgates are going to open.
Yeah.
If you're not ready, then
Now I think we feel like we're ready, and so we're.
I would love to have you guys back on. I know we're running out of time. I'd love to have you guys back on, and if you guys could, almost make up. We don't have to get into people's specific finances, but take a client or a member.
Please. A case study would be great.
Let's do a case study right on here.
We'd love to do that.
And let's do one that's someone
we can break down some numbers. We can
someone
show,
who has a
Are
job.
we able to show like
absolutely?
Someone
we'll
who has a job. They're making
$100,000
to $200,000 as a family, and they have 50 grand saved up.
Yeah, how would we
50 grand capital? How would you deploy that? And what could they make? That I think that would really resonate with a lot of people.
All right. Well, look, I guess it sounds like you know, we have plenty more to talk about. But again, guys, this was fascinating. An hour and a half conversation. We could again go on for more and more time. But Anish, thank you. The concept is brilliant. Gavin, thank you for introducing me to this whole crew, because I think you guys are really onto something here. I think it's going to be one of the next biggest things, and I hope you guys all the success in the world. Plotify, Anish, Gavin, and another real estate Atomic Real Estate Show. We'll see you guys next time.
If you enjoyed our episode, please consider supporting the show by rating and reviewing the podcast. Also, check us out on Instagram at Atomic Real Estate Show to find out when new shows drop and to participate in our community Q&As. The Atomic Real Estate Show was brought to you by Direct Subs. Direct Subs is the #1 place for real estate investors to connect with local contractors for their flips, rentals, renovations, and new construction projects.